The big story has to be the tumble that sterling is taking because of market jitters about what many are suggesting is going to be a very messy Brexit exit. And we're seeing some of that spilling into our own markets here, where the rands began steady in the morning. We are weakening as the minute goes by. So let's get the detail of why that is the case. Han Tan is market analyst at FXTM. Han, thank you for your time. I just wanted to understand this growing fear that Brexit is not going to be as many people as expected. Is this because of Boris?
Well, to be fair, it's not just Boris Johnson. You've got the two prime minister candidates who are left in the race, who both have stated that they are set to perhaps reject the Irish backstop. What that means is that ramps up the likelihood of a no-deal Brexit. So sterling traders right now are ignoring the hard data, forget about the fastest wage growth in over a decade, forget that unemployment rate is at its lowest since the 1970s. Markets are primarily concerned with the Brexit uncertainties and perhaps the announcement of the next UK Prime Minister next week could bring us one step closer towards a lasting resolution as to how this Brexit saga will actually conclude.
Yeah, so perhaps just explain for us in emerging markets how this is going to impact us, because as I said earlier at the beginning, we saw the rand a tad stronger against the US dollar, but we've erased all those gains that we had in the morning and we are trending weaker.
Right. So what the Brexit uncertainties does is that it adds another layer of uncertainty. Now, you're right to point out that emerging markets are certainly exposed to external headwinds. Of course, we have those US-China trade tensions. We've got moderating global growth. So all that is feeding into the sentiments around the emerging market universe. So if there is a no-deal Brexit, as mentioned earlier, that could just be another catalyst for risk aversion moving forward.
Yeah, and then when you look across the globe, of course, we've got the China-US trade war, as you mentioned, also lurking in the background. At the same time, I'm seeing a story here from one of the analysts suggesting that, hello, we are past the trade war. We're now talking about a currency war. How true is that?
Right. Well, I think to that point, we have seen the currency being included in some aspects of trade deals that the U.S. has secured with other major trade partners. We saw that with the likes of Canada and Mexico, right, and also in the discussions with other North Asian economies as well. Now, while for now we have seen the discussions primarily centered around trade, in recent months we have seen it spill over into the arena of tech dominance as well. So I wouldn't be comfortable with saying that this is on the verge of a currency war, but what we have seen in recent precedents that the currency management, that has been an element that has been factored into ongoing discussions between the U.S. and its other trade partners.
Yeah, one of the big gainers we've seen out of all this is, of course, the old precious metal gold, though today I see it's not really going anywhere. I'm looking at a price, $1,411 an ounce, down about 2%. Why isn't gold flying?
Well, right now we are seeing gold moderate towards that 1,400 psychological level because we have seen this dollar strength just today, given the broad-based positive surprise in U.S. retail sales, also the factory output. Those economic sets are still telling us that the U.S. economic fundamentals remain robust. So the question here is what that does to market expectations when it comes to how the Fed will move on its policy rates in the second half of this year. Now, keep in mind, gold's rally in recent months has been predicated that there will be a weaker dollar because of the ensuing Fed rate cuts. So now with the stronger U.S. data, that case may not be as solid as markets used to think just a couple of days ago. But I think it's fair to mention that at this point in time, if you look at the Fed funds rate, the Fed funds futures, markets are still pricing in a 100% chance of at least a 25 basis point cut by the end of this month.
So would you be so brave as to put a top on gold? Is this the pick?
Well, given the overall sentiment of risk aversion that we have seen, and given that market sentiment is still fragile, keep in mind those U.S.-China trade tensions at this point in time, they still are unresolved, and we have seen markets being blindsided by unexpected developments on that front. So I wouldn't say that we have seen gold top up. There remains some upside here, provided those catalysts actually come into fruition, that being either a sharp deterioration in the global growth outlook or a sudden spike in geopolitical tensions.
Thank you. That's Han Tan, market analyst at FXTM.